Hi guys, welcome to the honeystocks.com weekend analysis for, as you can see there, the 4th of May 2019. Now this is a bit of a Star Wars edition because I'm a complete Star Wars geek, so hopefully the charts that I'm going to run through with you today, I think there's about 15, maybe 18 charts, stocks that I feel like should be on your radar for next week. But as always, before I get started, please read this important disclaimer, pause the video, and just give it a quick scan. Now, the first thing to say is when I walk through these charts, you'll probably understand that there's a lot of, I suppose, wisdom that goes into the charts. I do not want to feel like I'm at the mercy of Wall Street. I don't want to feel like I'm being eaten alive. And the one thing that I absolutely hate is learning from big losses. Now, hopefully, you'll get a lot from this. Hopefully, you get some incredible trade ideas for the forthcoming 7 days. And if you do enjoy it, please do subscribe to our YouTube channel, honeystocks.com, and feel free to check us out in everything that we do. If you are somebody that struggles and you perhaps are learning from the losses, maybe you just don't have the discipline or the structure, then stick around for a couple of minutes at the end. There may be a couple of things that we can do to perhaps help you out. But rather than me just ramble on, I think it's probably good just to get moving and get started with the charts. Now, first up this week, we have Yeti Holdings. Now, this is actually a chart that I posted. Obviously, there's a lot of technical analysis that's not presented to you today. However, what we can see here is we've had positive earnings, we've had the Wall Street discount on the back of earnings. For those of you that are not familiar, I would suggest that you go and hunt down my blog on earnings season, immensely popular, and this is exactly what I'm looking for. Wall Street discount, clear support, off we go. So yeah, Yeti Holdings, I feel like, should start to make its way back to its previous highs there. It's obviously a recent IPO, so it's very difficult to gauge exactly what the structure of price is going to be. However, we do have to anticipate it being a high growth potential stock. So therefore, we just have to identify these optimal entries into the market. And I feel like at the moment, Yeti is probably presenting that to us. Next up, we have Ball Corp. Now, Ball Corp is mega popular amongst a couple of my guys, and as we can see here, with good reason. So certainly, what we're looking for are new optimal entries into trending stocks. We've just broke out above $60. We've built a base. You've heard me say it a million times, guys. The bigger the base, the higher in space. So I feel like Ball Corp is certainly one that we should all be considering. Planet Fitness, I mentioned it a moment ago, the Wall Street discount on the back of earnings, and this is exactly what we've got now. Again, we broke out above $60 last month, maybe 6 weeks ago. Beautiful looking trend. We've had the Wall Street discount, boom, support, entry, and off we go. So I do anticipate this, provided that we get further continuation on Monday, Tuesday, for this to start to travel and make its way towards $80, which would obviously represent a decent upside, provided the market plays ball with us. It's not just about the individual stocks. I'm sure quite a lot of you that are watching this presentation probably understand that, but certainly if the market plays ball and the stocks play ball with us, then this should, in theory, start to make its way back to its previous highs. Now, Progressive Corp is one that I've had a few emails and messages about this week. Now, absolutely, above $74, we can be bullish. We had a bit of a bearish signal on Progressive Corp recently, and we've got a bit of a drop. Now, provided $74 holds as support, then I am certainly bullish. Certainly the 50 MA would be a key level as well that I would be watching. But I think all bets are off if we move back below into this level. But hopefully Progressive Corp, it's obviously a huge company, and the expectation is that this now, goes on and creates new highs and starts to move towards 80. But there is a bit of note of caution at the moment with Progressive Corp. It's not one that I'm I suppose, super confident in. I am reasonably confident, but not super confident. Micron Technology, now certainly we've had this downward sloping trend line. We had a failed move above it a couple of weeks ago. It's required a lot of patience, guys, but it does look like we might have a potential breakout here. Now, if we get continuation on Monday, Tuesday, I do like entries around the $44 mark. And hopefully that then starts to move back through the levels. I think we have earnings in a few weeks' time as well, so there is a little bit of sort of leeway with time, etc. So I feel like Micron Technology is certainly one that you should maybe be adding to your watch list. CPRT, now this one has been trending beautifully recently. We had a stock split quite a while back, and certainly since then we've just been waiting patiently for this breakout here. Looks like we're getting it. I think for me, I would be looking for anything above $70 would represent a good entry for me. But certainly, it wouldn't surprise me to see this fall away a little bit, followed by a move to the upside, forming a chart pattern that's reasonably favourable. So yeah, certainly it is one again I think you should add to your watch list. Now, Auto Home is one that I've had a couple of messages about this week. Again, I'd be looking for a clean breakout above $120. I feel like by taking entry here, it doesn't represent any sort of decent risk to reward. If it's a trade that you're currently in, be mindful of earnings coming up. It's absolutely valid as this approaches 120 to maybe think about taking profits on a technical level. I'm not interested in you fundamental guys that are saying, why would you sell? It's a great company or all the rest of it. I'm a technical trader, 90% technical, 10% fundamental. So for me, this represents a profit target. So I would certainly be looking to tighten up stop losses, protect profits. And if it moves above 120, fill your boots, move back in. But certainly it's not the way that I would look to play it, just to buy and hold and hope for the best. I don't like trading on hope. Next up, we've got Alibaba. Now, again, lots of emails and messages about this one this week, guys. I'm not interested in taking an entry here whatsoever. I don't see where the risk to reward proposition is. I see too many levels of clear resistance in close proximity. So again, if Alibaba's a trade that you're currently in, as you start to approach these levels, those represent profit targets. Certainly, the hope is for every stock that it continues to climb higher, it continues to make new highs, etc. But I think when you enter into stocks and you're trading below 52-week highs, then you have to be super cautious, and you can look to perhaps maximize profits. And there's nothing wrong with reallocating risk elsewhere. So certainly that's my view on Alibaba at the moment. It's not one that's immediately appealing to me. I'm not going to be taking buy positions anytime soon in Alibaba. So certainly it's on the watch list. Like the whole of Asia is. I am still bullish Asia, but certainly it is taking a little bit of time to get going. Apple, again, lots of messages about this one. Now, for those of you that don't know, my guys have been in this since this move above $200, or I shouldn't say all my guys, quite a few of my guys taking an entry at 200. That's the optimal entry. Certainly, we've had good earnings. It's starting to move, but again, we're kind of in this area where there's not any real risk to reward being offered. I like to call it no man's land. So it's not a clearly defined pullback. It's not a clean breakout or anything like that. So for me, I'd be looking for a move above 230 or any sort of pullback entry. I wouldn't be looking to enter in at 210, 215, anything like that. Next up, we've got Zendesk. Now, on Tuesday, my halftime report to my client group highlighted this one as a potential entry on the back of positive earnings. Like I've said before, what I'm essentially looking for with earnings season is I'm not really looking to hold through earnings or anything like that unless I have a very, specific percentage profit in place. And that percentage profit is 10%. So for me to hold through earnings, I need to be at least 10% in profit in order to hold through earnings. If I'm not 10% in profit, then I'll just sell the position, and I'm looking for this scenario. And what the scenario is I'm talking about is, again, like I've said before, I'm looking for stocks that report well on earnings and Wall Street finds a way to decline the stock. This is why earnings season is such a gamble. And for those of you out there that are perhaps taking buy positions in the minutes and hours and a couple of days before earnings, I would urge you to just reconsider your strategy because it's very amateur. It's it's a method that will never give you consistency. You might get the odd win here and there, and you might think you're the world's greatest trader at times, and certainly I've been there and I've done it, so I know how it feels. But I feel like the more sensible way to look for is to just wait for positive earnings and the Wall Street discount. They just tank the stock for no reason whatsoever, and then you just simply wait for the support to come in, and then you jump in on the back of it, and off you go. And this is something that I highlighted on Tuesday with Zendesk. So if you missed the Wall Street discount on, I think it was Wednesday, maybe Thursday actually. Certainly, we're close to getting a breakout now. So I think Zendesk is one that maybe you should look to add to your radar and go from there. Now, I do still have a few more stocks for you, but I think maybe the first thing to say is, if you're watching this and you're thinking, what the hell is this? What the hell is that? I suppose what I like to do and what I'm known for is finding optimal entries into the market. And just to explain that a little bit, I think when you have optimal entries into the market, it removes half the battle. Because if you consistently pick good entries time after time after time, it just makes the trade management side of things and it makes the profits just flow thereafter. I don't like to trade on hope whatsoever. I've got a lot of structure and a very rules based system in place. And this is what I find works for me. It tends to work for most. It's the trend following strategy with elements of swing trading thrown in. And this is really what I do. I think as soon as you start to, move into the day trading game, if you're trading off minute and hourly charts, I think you're just opening yourself up to a world of pain. And certainly I don't like to have a world of pain. I like things to be sunshine and rainbows. And this is really the strategy and the system that I have, and it just works. So certainly if you do enjoy this and you are finding value from it, again, please, subscribe to our YouTube channel. We like to throw, some of these out there every so often. So yeah, absolutely, hope you're getting a lot from this. Now, a couple of things just to touch on as well. Now, it's not just about your individual stocks, it is about the overall market as well. So you need to have a broad understanding of what's going on in the overall market to be able to tell exactly what you should be doing with your individual stocks. And I think when we look at, I suppose, a triple Q in tech at the moment, we can clearly see that we are trading above resistance. Now it looks like we've got resistance that's turned into support, which is awesome for tech. So, just to reiterate the message that I've had since way down here, we should be bullish tech. So absolutely, this is a place that we want to be. This is where we want to be identifying strength. So tech is very much on the menu at the moment. Now, the S&P 500 is getting a little bit tricky. We obviously had a decline on Wednesday, Thursday, which I know there's quite a few of you out there that were possibly panicking. For me, it was more of an amber alert. And certainly, hopefully, again, just to reiterate the message, if we get a move above this, key level here, then absolutely we're going to be bullish the market if S&P 500 starts to make new highs. But we did have a bit of a slight failed move there, and obviously the Fed didn't help things. But absolutely, if we get the continuation on Monday, Tuesday, then that's going to be good news for the market. And likewise with the Dow, again, we're still trading below resistance at the moment. It's not great, but if we can get a move above here, then hopefully that will take the overall market the next leg higher. But certainly, tech has already started to make the next move. So I feel like tech is where we should still be looking. Now, with that said, Estee Lauder is obviously not a tech company by any stretch of the imagination. However, again, just to highlight again, Wall Street discount, earnings, tanked the stock, support found, off we go. So this is really where we should be looking to take advantage of earnings season. And this is why I suppose my group, my community is so successful because we have the understanding that you don't need to gamble earnings season. We just need to wait for the Wall Street discount. And certainly Estee Lauder has offered that, and now it's off and running again. So certainly I think any further little pullbacks might be valid to move in, but certainly I would expect Estee Lauder to start to kick through the levels 180, 190, possibly 200. It will take a bit of time to get there. It's not one of those stocks that's going to rapidly move, $10 overnight. But certainly, if you like slow, steady performers, then Estee Lauder is certainly one of those. Now, Square Inc., yeah, lots of messages about this one. Sometimes the stock just doesn't play ball with us, guys. Certainly, we've got this, clearly defined trend line. So if we get a move above this, then certainly I would be, reconsidering my thesis on it, but at the moment, it's just a case of standing aside. And for those of you in there, I like Square Inc as well. It done very well for me last year, but sometimes the trend just ends and you just have to deal with it. You have to move on and reallocate your risk to another stock that's going to start moving. So absolutely, it's something to consider, but not at the moment. If you're jumping in at the moment, you're taking the gamble of catching a falling knife, and certainly that's not a place you want to be. Now, next up we have Cree Inc. Again, Wall Street discount. It opened up, then it just immediately found support and off it went. So for those of you that are looking for an entry into Cree, it's obviously moving beautifully at the moment. I think above $70 is the next logical entry spot into Cree. And yeah, given that the strength of the recent trend, I would suggest it's one that we want to be, looking at closely. PayPal, great earnings. My guy's got an alert on this, above $100, off it's gone. It's a beautiful looking trend at the moment. If we think about where it's come from, and certainly I don't see the trend ending anytime soon, unless there's maybe some sort of sector rotation, which is always a concern. I certainly don't see any issues with PayPal at the moment. It's moved into the next level above 110, so I would expect this now to start to kick towards 120. Now, this might be a strange one for those of you that follow me closely. It's not very often that I look at stocks under $10. However, I am aware of when there is strength in the market, and this is a stock that certainly has been on the radar since above $5.50 for myself and my community. There's starting to be a lot of hype behind Zynga, especially when we think about mobile gaming and 5G, etc. So I would suggest that now that we are moving above key resistance dating back to 2012, that this might well be a stock that should be on your radar. Now, I wouldn't suggest, with a stock trading at $6 that you go jumping in with a full position, but it makes sense to me that you might want to take a little bit of an educated gamble on this one and maybe look to take a small position with a view to maybe scaling in further positions as a trend develops. But certainly Zynga reported really good earnings, so I feel like above $6, I think we've got to be bullish. Twilio, again, my guy's got an alert on this above $100. It had a high of 142. Earnings, again, tanked the stock. Where is it? What's it done? It's found support, and then hopefully this should now start to take the next leg higher and move towards 150, 160, and so forth. That trend, guys, is as beautiful as it gets. And this is obviously where the attraction in my trading style comes in, because we obviously want to be in these big moves to the upside. Sure, you'll deal with little dips here and there, but by and large, this is a stock that we absolutely want to be part of. And yeah, Twilio is one that you should definitely have on your radar. And next up, we've got Roku. Again, lots of messages about this one. It's potentially looking to break out. I think if we get a move above this trend line here, then absolutely, above $65, $68 maybe, we can maybe start to move towards 80. But I wouldn't look to be doing anything here until we get a breakout above this level. It's obviously trading in a downward channel at the moment, which isn't great. But certainly, if we get a breakout above this level, then Roku might well become interesting. So obviously, there's a lot of charts for you to consider there for the forthcoming week to 10 days or so. And, like I said at the start, if you are somebody that perhaps struggles a little bit, I do understand that the road in trading can be a difficult one sometimes. And I know it can be a lonely one. But I think when you have a lot of structure to your trading, I think the one question that I always ask myself is how much happier would you be if you could cut out all the noise and just make some good decisions in the market? What if you didn't feel like you were at the mercy of the stock market day after day? And what if you were able to build a trading plan and a rule set for the rest of your life? I know what structure and discipline has done for me. And when we look at the honeystocks.com community tracker, now, for those of you that don't know, I log every single trade idea that I post into my client group on my website for complete and open transparency. You can see the date that I posted the chart, you can see the company, you can see the ticker, you can see the price that I posted the chart, and obviously you can see what it's done thereafter. So it's up to you to obviously decide at what point you want to exit your trade, etc. I can obviously help with the trade management side of things, etc. But certainly when you compare, 2019, and you can have a look at 2018 as well, it's all up on my website for everybody to scrutinize and, go over. So I think that's certainly, what I offer and what I do. And when you look at the journey of the average trader that's beginning or maybe just starting out or learning at the moment, I know the journey looks something along the lines of 2 years. And, during those 2 years, you're going to be learning from losses. You're trying to learn from YouTube. You're reading book after book. And eventually, you're just going to say that to the stock market. And although it's a very funny picture, I know the reality is anything but. And at honeystocks.com, we truly believe in making a difference. And when you go onto our website, you can have a look at, the testimonials that we have. We've got clients from, LA to New York to London, all over Europe, to Hong Kong, to Australia. We've got an incredible group of traders based all across the world that know how to identify strength within the market, and this is why we're all so successful. Now, the question you maybe want to ask yourself is, do you want to keep doing it the old way? Maybe you're day trading, maybe you are just not getting the consistency. And if you are wanting to move away from the old way and you want to move into a new style of trading, then maybe we can help. Every single week, I allocate time to speak to you, and it's very, very simple. All you need to do is jump onto our website at honeystocks.com. If you just click on apply, just choose a time, tell me what it is that you struggle with, and we'll have a quick chat. It really is that simple. There's not any pressure to buy anything. There's not any, there's not any pressure for me to, just, push you in a direction that you don't want to go. But I think if you jump onto our website and choose a time, what I like to do, just in general, is have conversations with traders across the world. I've had hundreds of conversations at this point, and quite often I can help on a phone call. So certainly, if you are somebody that struggles, don't be shy. Please just jump onto our website and choose a time. Fill out your details. The more detail you can provide, the better. It just makes things a lot smoother and a lot quicker on our conversation. And I can just dive in straight to the problem right away. So if you are somebody that struggles, then feel free to jump onto our website, schedule a call with us, and if we can help you out, then we will. But certainly, if you've stuck around till the end, thank you very much for watching. And as it says there, may the force be with you. Thanks very much for watching.